This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Friday, November 4th. It's been yet another pretty interesting week in crypto. Now that Elon Musk is at the helm of Twitter, what do his plans for the social media company have in store for digital assets? Why is Dogecoin rallying? And what's the outlook for crypto earnings this quarter? Here to help me break down the news, we have Bloomberg Crypto Deputy Editor Beth Williams.
This meme coin that Elon Musk loves has soared, and the feeling is that maybe he'll allow that to be used for payments on Twitter, so that would gain it some credibility and relevancy.
And Senior Editor Dave Liedtka.
This is a market of expectations, and without expectations that it's going to rise or you can drive excitement about it, it has basically stalled.
Beth, Dave, welcome back to the show.
Hi, glad to be here.
So this is one of those lot of stuff happening in earnings weeks. And so, Dave, I'm going to start with you. So let's talk about MicroStrategy. The last time we talked about them, they were going through a fairly significant, shall we say, leadership shuffle. And this is their first earnings since then. What were the top lines?
Top line was that they had a loss on it. There was some speculation that they would have a profit. It was a small loss, but it was still a loss. And last quarter, they blamed it, the actual reason was for an impairment charge they had to take for their Bitcoin holdings. They had a very small one this quarter, but the real issue was their revenue from the two biggest businesses actually went down on it. So they have other issues to address. Maybe that's one of the reasons that Michael Saylor is now focusing on their, quote, Bitcoin strategy.
Now, as a reminder, when you say MicroStrategy's other businesses, they're not actually a Bitcoin company.
No, they're an enterprise software company founded by Saylor and a few college buddies. Used to do things for like McDonald's and some interesting point of sales business. That's been a lot of residual revenue over the years. But as he stated, we either had to grow or change strategies, and he chose to
diversify into crypto. So MicroStrategy is just one of the companies that reported earnings this week. Folks have been really looking to see what happens with Coinbase as a queue, obviously the only publicly traded crypto exchange in the US. But another big theme, both of our coverage and I think just of like what people are paying attention to in the markets generally is about crypto miners. It doesn't look good for Bitcoin miners right now.
No, it doesn't. Argo came out the other day and said, hey, we may have to shut down after some funding they had tried to arrange through stock sale fell through. And that followed the announcement from Core Scientific, who is one of the largest Bitcoin miners, saying, hey, we may go out of bankruptcy because we may run out of money pretty soon. So the crypto winter is starting to hit home with all these companies. You can see now, whether it's the miners, whether them or even the likes of Coinbase, which will see a decline in revenue from both their institutional and retail customers of estimates of 20%, which is pretty astounding when you think about it.
It is. And I mean, when you say, Core Scientific, one of the largest Bitcoin miners listed in the US, their shares have fallen nearly like 100% this year, which is kind of mind-boggling for sure, but it's also way more than the actual decline in the price of Bitcoin. Our colleague David Pan has written, shall we say, extensively about the challenges facing various Bitcoin miners. They've gone through winters before. Is the expectation that there's going to be consolidation in the industry? Is it that some of them are going to kind of survive, possibly change business models? It just strikes me as really unusual that somebody would actually invoke the B word bankruptcy in a filing when that's something that companies really tend to try to avoid at all costs.
You're probably going to see both on it. There'll be consolidation. There'll be winners, losers. Companies will go away. They have a real symbiotic relationship with the market. you can't really have Bitcoin without the miners and vice versa.
Mm-hmm.
But for the investors who bought crypto miners as an equity diversification, now they're getting a real lesson in how traditional finance works. In a bankruptcy, more times than not, the equity investors are wiped out. You're no longer tracking the price of Bitcoin. You're really at the mercy of the courts at some point, and that's just dividing the assets among the creditors, and they're subordinate. The equity holders are subordinate to the creditors.
Right. To that point, too, what you're seeing when you see that this arc of companies going under, you're starting to see the rise of more distressed investors getting into Bitcoin mining, too, or trying to pick up investments on the cheap, another sign of distress.
You know, Beth, it's interesting that you mentioned that. We had an office move recently, and, you know, the moving god saw fit to put the crypto team right next to the credit and distress team, which was sort of an accidental quirk of desk availability, but it's been really helpful because we're working with those folks so often. One thing that, you know, we've started to see, to your point, is not just the distressed investors, but also the lawyers and the restructuring advisors. Who are some of the folks whose names are very TradFi who have popped up in crypto in recent weeks?
Names in lawyers or?
Yeah, like we just published a couple of days ago that Paul Hastings and Mo Ellis are both emerging in this particular space.
Yes, and Paul Hastings has been involved with defending being the lawyer for some of the executives at Celsius, as well as Core Scientific, now an advisor. Go where the movement is, and right now the movement in crypto is distress. So you're seeing bankruptcy lawyers sort of learning, trying to carve a space there where they can, in some cases having to actually bone up on the industry. And it's sort of uncharted territory between the Voyager Digital bankruptcy, the Celsius bankruptcy, and now these potential bankruptcies with mining. Sort of, what do you do in the digital asset space when we're talking bankruptcy? And also in the case, you know, separate from mining, where you're talking about issues where some of the creditors are customers with crypto stuck, you know, in limbo.
Right. To Dave's point, it's sort of where in the ranking are you if everybody's coming after these kinds of assets? There's a different kind of distress that's mostly affecting media Twitter, which is all about Elon Musk having bought Twitter.
After revolutionizing the space race and electric cars, the world's richest man is now promising a Twitter makeover.
The multi-billionaire bloviator firing off a tweet saying he's buying the platform to, quoting now, help humanity.
People having many an opinion about everything to do with, will you pay $8 a month to be verified, to what does him becoming CEO mean for crypto? We are a crypto podcast, so we're not going to talk about verification here. But Beth, you've been working with the various reporters, including our colleague Hannah Miller, who's a regular on this show, about what Elon Musk might mean for crypto Twitter. What are some of those top lines?
Well, crypto Twitter is a big part of crypto. The crypto community is very attached to Twitter, telling their messages, pumping, dumping sometimes. But they also have a sort of a ethos about decentralization, and perhaps crypto could be an avenue for a social media platform like Twitter, sort of democratizing the social media platform, letting people decide the kind of moderation, like from a base level, from the grassroots level, how they want the platform to be run. And Musk has sort of danced around. He's been sort of coy about his willingness to sort of go there. And so I think there's a lot of expectation among some of the crypto world that he will try to go there. One way of seeing that is this rally in Dogecoin.
When we say rally in Dogecoin, where is Doge trading?
Doge is trading at less than 15 cents right now. So let's just
let's be clear.
Temper that a little bit. Technically, it rallied, but this meme coin that Elon Musk loves has soared, and the feeling is that maybe he'll allow that to be used for payments on Twitter, so that would gain it some credibility and relevancy.
People are basing their Doge enthusiasm on like an emoji, right? Like somebody asked Elon a question like, my guy, what are you doing about Doge? And he was like, eyes emoji. And I was like, what does that even mean?
He tweeted a picture of a Shiba Inu with a Twitter t-shirt on. So, you know, make of that what you will. But other more serious developments, Binance, which is a huge exchange, crypto exchange, has invested $500 million in Elon Musk's Twitter and said that it's developed a team to sort of look at ways to use blockchain technology to help with the issue of bots, which has been this issue, these bots that flood accounts or, flood the network, scams, and et cetera. And maybe blockchain technology or NFTs could be used to sort of mitigate that somewhat. Again, like Elon Musk is a very interesting character. He's got a lot of money. He's got a lot of thoughts. Crypto, is hoping that some of those thoughts may help to boost the industry from an idealistic standpoint. And then others who are more speculative think, I'm going to buy Doge now because it's going to become the currency of Twitter. So we'll see.
Indeed. We'll be right back with more of the week's top crypto stories with Bloomberg editors Beth Williams and Dave Liedtka. Let's talk about something that's trading at $1, i.e. the US dollar. One of the, I suppose, counterintuitive things about crypto as a market over the past several months has been how much it's been a Fed story. And, there's no expectation, well, I'm sure there's at least a few economists who somehow miraculously think the Fed is going to cut rates. But the broad, reasonable expectation is that they're going to be in an, increasing interest rate environment for the foreseeable future. Dave, what does that mean for Bitcoin, which had been sold as this inflation hedge and does not seem to be performing in any way that suggests that's true?
Well, it's been evident for a while now. It's kind of stuck in the water. It crashed in the spring, early summer. It's trended around 20,000. And this is a market of expectations. And without expectations that it's going to rise or you can drive the excitement about it, it has basically stalled. Mm-hmm. And the main reason is the Fed has readjusted expectations for risk. So there's no longer free money in the system or 0% money on it. And now there's a cost of speculation on it. So people are reining in that speculation.
In the absence of either the Fed ceasing to raise interest rates or cutting interest rates and there being some kind of gigantic hype cycle about anything other than Doge, what are some of the analyst expectations that you've seen for what's next for crypto? I mean, folks are looking into, you're seeing more activity in some of the altcoins. There's a lot of conversation right now around what's next for DeFi. Various countries, the latest being Zimbabwe, are starting to talk about, well, maybe we'll just get into our own digital currencies. What are some of those kinds of trends?
The biggest trend you hear, really, even from the maximalist in the Bitcoin world, is that the institutions are still hanging in there on it. They've poured a lot of money into development, whether it's through VC money or some of the more better-known major banks through development, that type of thing, whether it's JP Morgan with its own coin and Jamie Dimon saying Bitcoin is trash, but we see the technology as a potential payment rail. Mm-hmm. So that's the incentive for a lot of folks to stay in and say, okay, the institutions are coming back. But it seems we're back at the test mode period rather than an acceleration stage again on it. And it's wait and see is very difficult when you're highly leveraged.
Exactly. I was in a meeting recently with, folks who work in and around payments and processing. And one of the things that they were saying is exactly your point. One, they're taking an experimental approach. They're gonna see what's working. But two, they're starting to really separate things like, crypto as asset class, investment opportunity, speculative risk reward from possibilities for payments, whether stable coins or just using the blockchain for, instantaneous settlements or whatever those things are. And it does seem like, the phrase of the week is Bitcoin is boring, but it does seem like right now people are starting to ask deeper questions around, okay, what else is there? Whether they find interesting answers to those questions is, I guess, something we'll have to talk about on the show. So we'll see. Beth, just as a kind of a closing thought, in your previous life, you were an editor on opinion. And the opinion team at Bloomberg has a lot of feelings about many things to do with crypto. What should folks be reading if they're interested in the opinion side's view of what's happening in this asset class.
Well, of course, you can't mention Bloomberg Opinion without mentioning Matt Levine, who just published the cover-to-cover issue of Business Week on crypto, but also for some very interesting insights that go beyond just your basic, crypto criticisms, but go a little deeper. Lionel Laurent, Parmi Olson, we have Aaron Brown, who's an investor as well as opinion writer, all have really nice, deep thoughts about the industry, how it fits into the broader financial system, and the questions to ask about it and potential solutions that it provides.
Email us if you've already finished the Matt Levine crypto issue. I know there's a handful of you that have not been doing any other work and are just reading that cover to cover. We'd love to get your feedback, crypto@bloomberg.net. You can find more of Beth and Dave's work on the Bloomberg Terminal, on Bloomberg.com, and on Twitter. Beth is B. Willie Liu, that's BWILLILIOU, and Dave is D. Liedtka, that's DLIEDTKA. Beth also edits the Bloomberg Crypto newsletter that we publish on Tuesdays and Thursdays, so do subscribe to that as well. On the next episode of Bloomberg Crypto, it's no secret that an industry that popularized the phrase, "when Lambo," might have a thing for fast cars. But can crypto companies really afford to keep splashing out millions of dollars on Formula One sponsorships right now? This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. Or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. Have a great weekend.